Now, and we're going to continue talking about mid-cap stocks. KEI Industries is a stock that has had a dream run. It's up nearly 200% in the last 1 year. Motilal Oswal has also turned positive on the stock. In fact, they've initiated coverage with a buy and they have a target price of 537. Anil Gupta, the Chairman and Managing Director of KEI Industries, joins us now to talk about that. Mr. Gupta, good morning. Happy New Year to you and thank you for speaking to CNBC TV 18. I want to understand the expansion of the retail business and what kind of growth that could bring on board for the company over the next couple of years.
Retail businesses will be growing around 30% this year and likely to exceed 1100 crore in the whole financial year. This year, as we had given an earlier guidance of around a growth of around 20%, but we are likely to achieve around 25% growth plus in value terms, but in volume terms, it may be within 15%, as was our guidance earlier. So far as in the subsequent years also, we see at least 12 to 15% volume growths in the coming financial years, in financial year 19 and financial year 20. The way we are building our businesses in export markets, in retail as well as in the EPC side.
Okay, so Mr. Gupta, good morning. In terms of your overall revenue growth, Q2 of course was reasonably strong. How much of your order book will get executed this year, and how much would be the CAGR both for revenue and profit going forward?
We are having an order book of around 2,500 crore at the moment, which consists of 1,700 crore from EPC and around 800 crore from cables. We have a very strong, booking for exports for next 4 to 5 months, and the outlook is also strong for the new inflow of the new orders. So far as we are also, L1 is in EPC businesses for another 500 crore worth of orders, which are likely to materialize in next 1 to 2 months.
Okay, you spoke about a 30% growth in the retail business particularly, and you gave us a figure of 1100 crores. That is for which year? Will it be for this fiscal or for FY19?
No, I'm talking of this fiscal.
Okay, for FY18. And overall, the retail business currently contributes about 30% to your overall revenues. How much do you think that pie could grow, just the retail business, over the next, say, 2 to 3 years?
Our aim is to take it to around 40% in next 3 years. So we want to grow it by another 3 to 4% every year. So as to achieve 40% of the company's business coming from retail by 2020.
Okay, 40% retail by 2020. So in the near future, will you be looking to expand in different markets? Geographically, where are you guys present currently in retail, and what would the expansion look like over the next, say, 6 to 12 months?
Geographically, we are present now practically in entire India. We have, retail teams, marketing teams working in all over the country, right, in all the regions of the country. And, we are in the expansion mode at the moment. We are setting up especially a low voltage cable new facility, which will be operational by April, which will primarily cater to the retail business. Especially for cables. We are also expanding little bit of capacities in our house wire, business also. We already have some spare capacity. Our capacity utilization in house wires are around 70%, and we are also adding some more capacity to grow by another 20% every year in the next 2 years, and we will have the enough capacity.
Are you looking to also increase capacity in your high margin EHV segment, and what kind of growth are you looking at there?
We had already added one more production line which was made operational in January 2017. So we have sufficient capacity at the moment for extra high voltage production of extra high voltage cables, and we are also working on commercializing our 400 kV product range also. I see a growth of minimum 35 to 40% in this business because the base was low. So we expect that kind of growth in this year as well as the next financial year.
So will that lead to higher margins as well overall for the company?
Yeah, definitely we are looking for higher margins for the company because of the better margins in that business. Maybe overall we can improve by 0.5% in the EBITDA.
Okay, all right. Thank you for joining us and giving us a quick snapshot. That's KEI Industries moving big in the retail space. It's currently just 30% of their business, but they're trying to grow it to about 40% or so and are making investments there. That's been a big mover lately. So is the market. So can't take your eye off that. Now 230 points higher on the Sensex, Anuj. It's really roaring this morning.
Oh yes, it's a trend.